This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the markets have just opened. The top stories this hour. Asian stocks are set for gains to kick off the region's busiest week of new listings in more than 2 years. Economists are expecting a cut today in China's loan prime rates. Striking Boeing workers to vote on a pay deal as the struggling playmaker releases results with approval far from certain. Also ahead, Taiwan's Premier tells us exclusively why the island is ready to go nuclear to power its chip industry. And we hear from Malaysia's economy minister as the government braces for a backlash over its plans to cut fuel subsidies.
Heidi, take a look at how we're setting up on the Asian session. Of course, we're watching for the open in Japan as we got the Japanese yen weakening past that 150 per dollar level last week. We're watching for potential government intervention, given that we also saw the new currency chief come out warning about one-sided moves. We, of course, have that biggest IPO since 2018 in Japan, also Tokyo Metro coming up on Wednesday. The ASX 200 at the moment, we are seeing, of course, a little bit of a rebound after those losses that we saw on the Friday session. The Aussie dollar also has been declining for 3 consecutive weeks. Same thing for the Kiwi dollar. We're seeing a lot of pressure across Asian currencies. It's not only about the Japanese yen. Of course, it's all to do with what's happening with the U.S. dollar, because we continue to get more solid results when it comes to data. We had stronger U.S. retail sales than expected last week, stronger jobless claims numbers than we expected last week as well. So that's really affected the picture in the U.S. markets. Take a look at how futures are coming up, because it's a big week of earnings across the U.S. We're talking about more than 20% of S&P 500 companies reporting this week, including Boeing, including Tesla as well. So far, we have seen some more surprises to the upside, and really that big move that we saw last week also propelled by some positive earnings results. We're talking about the S&P 500 seeing its 47th record high of the year already, Heidi. 6 weeks of gains for U.S. stocks.
Shery, let's take a look at some of the other key events that we've been watching this week. And global finance chiefs are headed to Washington for the IMF's annual meetings. And ahead of the event, the fund is urging officials to tighten their belts after a warning that global public debt could reach $100 trillion by the end of this year. Over in the Russian city of Kazan, the BRICS group will be meeting starting on Tuesday. They'll likely discuss expanding the bloc further after almost doubling in size this year. Plus, energy professionals and policymakers are attending the Singapore International Energy Week. In focus, the world's leading energy challenges and the actions for transition needed. We're also just 2 weeks away now from the US presidential elections. Democratic nominee Kamala Harris will host a CNN town hall this week, while Republican candidate Donald Trump will hit some friendly terrain, including an appearance before a gun rights audience. Well, some of the price action that we're seeing in some of the world's most risk-sensitive assets signalling concern that the Fed's decision to begin lowering rates may have been premature. Garth Reynolds leads our Markets Live Asia coverage and joins us now. And Garth, that's really the big question, isn't it? Particularly as, you know, data point after data point for the US, particularly pertaining to the consumer, continues to show that resilience.
Yes, it does. And to some extent, that resilience has been fired up by the Fed's decision to not just begin cutting interest rates. I mean, it had made it so clear it was going to cut in September, it would have been hard not to. But to go 50 basis points sent a very strong message that, you know, the Fed sort of has everybody's backs, and consumers to some extent have responded to that. The data indeed has also turned to be more resilient than the Fed might have thought it was. You know, we had some concerns about the jobs side of things, which have waned. They're still there somewhat, which is why the Fed still has an easing bias. But you know, between the rebound in jobs, signs of very strong retail sales, signs of sticky inflation pressures, you know, you've got this ongoing risk, at least for the bond market, and especially for risk assets outside of the US, that inflation is going to stay high, and the Fed is going to end up not cutting rates in one of the 2 meetings before the end of this year. And that's why you've got the US dollar riding so high. That's also got a whole range of emerging markets in particular, where central banks and policymakers in general are wondering, well, what do we do now? We thought the Fed was on the easing path, so we can ease as well. That when we think we kind of need it, But now we don't know. If the Fed is not going to ease, then we can't either. So there's a lot of uncertainty out there, especially outside of the US. The picture inside of the US is a lot more optimistic.
Yeah, and that, for currencies like the yuan, it's a triple whammy, right? Domestic, US, Fed, elections.
Yes, yeah. The election is one of the things that's hanging over all of those currencies, not just the yuan, but the yuan is very much at the heart, the cutting edge of that trade. But that also drives the yuan. One of the things that's different now versus last election, and in particular when Trump came to power last time and then pursued those tariffs, is that the yuan has come to play a greater and greater role in the global FX environment. So these days, when the yuan drops, so does the Australian dollar, so do a range of emerging market currencies. It even feeds through into the euro, which is the most traded pair outside of the US dollar. So that all says that the elections are going to go on being a dollar positive. So the dollar is kind of in a win-win. It gets haven demand because of geopolitical risks. It also gets risk on demand from on the internal side as the US stock market rises and as yields go up as well.
Yeah, and you're thinking perhaps Trump's policies could be more inflationary, so you're getting more dollar strength. And on the other side of that trade, of course, we have the likes of the Japanese yen, but also the Mexican peso that continues to get hurt, right? As we head towards the U.S. elections, what are some of the key assets that you'll be watching?
Well, those ones that you named are very strongly amongst them. I mean, U.S. yields, that's a big question mark. They've got something of an upward bias from the US political fiscal outlook, in that either side of politics is sort of committed to increasing what's already very strong levels of spending and very large deficits. If Trump is going to win, you're going to add in the tariff component to that, as well as his tax cut plans are perhaps a little bit more extreme in the fiscal expansion side of things than Harris's plan. So that's something to watch. Crypto is also worth watching, even with the Democrats trying to be more crypto friendly. That's instinctively a Trump trade. And then, this Asia in particular, Asian equities, Asian risk assets, they are very much the sort of things that are going to be burdened by a Trump win and that are going to be relieved should Harris manage to get to the White House.
Garfield Reynolds, who leads the Markets Live Asia coverage there with what to watch in the markets. And of course, Heidi, you mentioned this earlier in the show. We are watching those Asia IPOs. It's going to be a really, really busy week, especially here in Japan, because we have the largest IPO since 2018. We're talking about Tokyo Metro. That's been really popular when it comes to investors. We're talking about a $2.3 billion listing. And all of this as we're headed towards we're talking about the U.S. elections. Well, we have the Japanese general elections here as well. So a lot of traders, a lot of these companies trying to get ahead of this political noise. And same thing we're watching in India, also another high-stakes trading debut for Hyundai Motor India's $3.3 billion listing.
Yeah, and you talk about, this need to try and get ahead of what potentially could be a really volatile end to the year and start to 2025. This idea of the revival of activity and momentum in these deals markets and how that's contributing to, what is being seen as a level of animal spirits returning to the Asian market, according to Herbert Smith Freehills. And you said it, we're watching the Hyundai India deal, some of these Hong Kong IPOs as well, around 20 companies in the APAC region listing shares over the week, could raise $8.3 billion in total. In terms of the volume that we're talking about, this is the biggest weekly volume since April 2022. That heavy supply, as you mentioned, we're watching Japan, where you are very closely, India, but also China as well. So it really is sort of a broad revival of some of the deal making and listings that we're seeing for share sales across the region as well. So that would also, as we watch kind of how these debuts are made, really kind of give us an indication of how investors feel in terms of that level of confidence, right, given how much lacklustre demand and confidence we've seen over the past few years. Very, very, very busy week ahead for these new share sales. But coming up on the Asia trade, we'll be discussing the latest developments in the Middle East with Red 6 International. Higa Industries, and the company that brought Wendy's and Domino's Pizza to Japan, will be talking to us about how the week again is impacting the broader food sector. Plus, the World Nuclear Association's Director General will be joining us as Singapore's International Energy Week begins. This is Bloomberg. Take a look at what we're watching when it comes to oil markets as well as gold markets, as well as we continue to monitor the latest developments in the Middle East. We've seen oil posting its largest weekly decline in more than a year as the US revived that push to try and end the conflict in the Middle East. We also saw levels of crude demand out of China slipping as well. So we are seeing not much of a change in that picture there for trading in Brent crude, New York crude just under that $70 a level there. Gold, though, hitting that record high, haven demand continuing to support prices given what's going on with the US election in 2 weeks and developments in the Middle East. Well, Israeli Prime Minister Benjamin Netanyahu has held a series of meetings with top security aides to discuss an attack on Iran. It comes after a Hezbollah drone penetrated Israel's air defences on Saturday and exploded next to Netanyahu's private home. Bloomberg's Michael Heath joins us now with the latest. So what are we hearing in terms of this reprisal that we've been watching for a while now, but also this extraordinary breach of Israel's defences?
Yeah, I mean, it just shows that Israel may have wiped out Hezbollah's leadership. It may have punished it in so many ways in terms of its missiles, but it's a serious organisation with serious capability, and this really underlines that. And Israel's had a bit of trouble with these drones. I mean, last week they managed to kill 4 soldiers on a base. Again, sending in 3 drones, 2 were shot down, 1 manages to get through. And just the ability to target the Prime Minister's country house there, it just shows their capabilities. And you sort of suspect that Iran was giving them a bit of assistance there because it's a very sophisticated operation. But even if not, I mean, Hezbollah it remains a significant force. As to the attack on Iran, or the expected retaliation on Iran, I mean, you'd anticipate it's coming soon. There was some reports released over the weekend in the New York Times, which sort of showed some Israeli preparations. They'd been leaked, some Israeli preparations for its attack with quite sophisticated measures, as you'd anticipate, and presumably this, Hezbollah making this attempt on Netanyahu's life, even though he wasn't in the building or anything like that, it's only going to intensify their resolve to strike back.
There's also discussions in Egypt about potentially reviving ceasefire negotiations with Gaza, and there was this idea that, with Sinwar's killing, it would potentially speed up this process. But we know that there's some, serious opposition to concessions within Israel. Yeah,
definitely, Heidi. I mean, it was a very interesting thing that Israel did choose to do this with Egypt, because you're right, that was the great hope after Sinwar was killed, that maybe Israel can declare victory and move to sort of some version of political solution, because if you do that in Gaza, then Hezbollah has already pledged that it would stop firing missiles. So that was sort of the key to unlocking it. But Sinwar's death even has been pushed off the front pages just because the violence has gotten so intense. Not only in Lebanon, Israel has struck the banking arm of Hezbollah, but also back in Gaza, in the north of Gaza, where Israel says that Hamas fighters are reforming. They've been attacking there as well. So it doesn't seem like the violence has tampered down at all. And as we sort of discussed in the past, it's a very right-wing Israeli government, and for Prime Minister Netanyahu to basically have a good hold on office, he needs to keep these extremist settlers groups on side, and they've got no interest in a political solution.
Bloomberg's Michael Heath there with us. Let's bring in, for some more analysis, Kirsten Fontenrose is a president at Red 6 International. She was previously Senior Director for Gulf Affairs at the US National Security Council. Kirsten, really great to have you with us. And just picking off Mike's last point, is there a plausibility of a political solution here?
Very likely not in the near term. You know, originally talks of a ceasefire sounded optimistic. Now, honestly, they just sound tone deaf. Well, the international community clamors for a ceasefire, but the two parties who've opposed one on and off are the only two parties who really matter, and that's Hamas and the Israeli government. The strategy has been to push for a ceasefire and then afterward to talk about who will manage Gaza post-conflict, but it's proven to be the wrong approach. In order to get Israeli buy-in for a ceasefire, the international community has to present Israel with a credible plan for preventing an October 7th attack from ever happening again. And empirical evidence indicates that if Hamas or Hezbollah are left primarily intact or even partially intact, they will regroup and they will attack Israel again in a couple of years. So Israel, since October 8th, has said they will not allow the conditions to be created to enable attacks on them again. So perhaps instead of shuttle diplomacy back and forth between Hamas interlocutors and the Israeli government, the international community should be focused on how Israel will be guaranteed security and focused on how Gaza should be governed after the conflict, because without a credible plan for this, Israel will not agree to a ceasefire.
What does that credible plan look like, right? Because is it realistically possible to have that assurance of Israel's security, given we've seen Gaza essentially decimated, given that we continue to see to and fro between the proxies as well, and we know that, you know, with all of the devastation, that it's likely that we're just seeing more of that cycle and the radicalisation continue?
You're right. And what that credible plan looks like is the burning question. You have Israel and the UAE right now putting forth ideas. You've had ideas from the U.S. government side. You've had ideas from Egypt, from Qatar, but there has not been an agreed upon idea. Part of the problem is Israel says, if we are not the ones inside Gaza guaranteeing our own security, who is going to do it for us? And no one is stepping forward. And even when there's conversation about, well, it could be an Arab force, they only want to do it if there's a U.S. force. No U.S. president right now would be able to commit U.S. troops on the ground in Gaza. It's just unthinkable politically right now for an incumbent president like Biden or for any of the, whether Harris or Trump come in. And frankly, an Arab security force, to be completely honest, would probably not be trusted by the Israelis because, as you mentioned, the radicalization continues. And so ground forces, troop level forces in many countries, even if they have peace pacts with Israel, would very likely be more empathetic toward Hamas goals than they would be toward Israeli goals. So an Israeli government will not trust that apparatus. So what does that look like? That's the burning question.
How surprised were you by the Hezbollah drone attacks on Netanyahu's home and how deeply they could really penetrate Israel's air defenses, and really what that means for Israel trying to find a way out?
Not entirely surprised, because we know Hezbollah has had a fairly sophisticated drone arsenal as well as a missile and rocket arsenal. Everyone's heard the numbers by now 1,000 times, over 150,000 rockets and missiles, drones inside the caves and tunnels. There was a tunnel last week that was opened that was 22 levels deep, just storing munitions, for instance. So because of Iran's assistance to their drone program, they send them blueprints. They can print quite a bit with 3D printers. A lot of the components can be ordered commercially online. So the wiring is really the only proprietary piece that's very tiny. Those components can be smuggled quite easily. So Hezbollah has built a quite sophisticated drone arsenal of their own. On the Israel side, yes, they have defenses, but as is the case all over the world, drone defense chases the drone offense, and defensive systems take quite a bit of time to develop. The technologies have to know what the enemy is firing at them and then develop a defense toward it. It's very difficult, and you don't know when a drone comes at you, what is the payload it is carrying, how fast is it coming, is it going to spread a toxin, is it going to spray something, is it going to drop a bomb, is it going to do a one-way attack and dive into my building? You just don't know. So, and each of those takes a different kind of defense. Is it operating on a telecommunications network? Is it operating over GPS? Is it using radio frequency? How is it flying? There's so many unknowns, and the technology changes in the drone world about every 3 months.
Kirsten, how do you see Washington's policy on the Middle East unfolding depending on who becomes the next U.S. president?
I think right now Biden may have about 2 months in November to December to January to take some steps with regard to Israel if he feels like playing it more tough love style, or if he decides to just go all in. And that's because he won't have to worry about elections. He won't have to worry about the Democratic Party playing to both sides of the bipartisan support for Israel that exists in the U.S. electorate. But no matter who you have coming in, you've heard recently, even the Democratic administration, the Secretary of Defense has reiterated America's ironclad support for Israel. We've had both Secretary of State and Secretary of Defense making those statements. So while there's a lot of recognition, including in a letter October 13th that Secretary Austin and Secretary Blinken sent to the Israeli government saying, hey, you are not allowing in humanitarian aid. They did not use the words war crime, and they will not use those words. And I don't think you'll see any American government using those words, regardless of who is elected. Most of the conversations will take place behind the scenes because what neither party wants to do, regardless of their private conversations with Israel, is embolden Hamas or embolden Hezbollah or Iran. They don't want to send the signal that the U.S. will not have Israel's back.
Kirsten, really great to have you with us as always. Kirsten Fontenrose is a president at Red 6 International as we continue to monitor the latest developments in the Middle East. But more ahead is coming up on the Asia Trade. This is Bloomberg.
Welcome back. India's central bank governor says he's in no hurry to join the wave of easing by global policymakers. Shaktikanta Das told Bloomberg that while inflation is expected to moderate, significant risks to the outlook still linger.
We expected, say, September inflation to be high. In fact, I had, if I remember correctly, in my statement, monetary policy statement, exactly 9 days ago, on 9th of this month, I had said that in September, we expect a big jump in the consumer inflation number. And we expect also a higher number in October also. But thereafter, in going into November and December, in the third quarter of this, in November, December, we expect inflation to moderate. And with regard to being behind the curve, I would like to say that, well, there can be a difference of opinion between certain sections of opinion makers or certain section of the market. But so far as Reserve Bank and the broad, overwhelming sector of the overwhelming section of the financial markets are concerned, I think expectations and thoughts are quite well aligned. The opinion poll, the polling conducted by various news, the wire services and business channels, all of them had, most of them had said that Reserve Bank will not cut, but Reserve Bank will change the stance, and that was exactly our decision. So I think market expectations and Reserve Bank's policy, they're well conversed. And I would like to say that certainly we are not behind the curve. Indian growth story, as I said in the beginning, the growth story remains intact. India is poised to grow at 7.2% according to the projection which we made in the last Monetary Policy Committee meeting. Growth is holding on, growth is steady, growth is resilient. Inflation is moderating with certain risks about which we have to be very vigilant. So therefore, rate cut at this stage will be very premature and can be very, very risky. When your inflation is 5.5%, and next print is also expected to be high. Right. You can't be cutting in, rate at that stage more, at that point. More so if your growth is also doing well.
The RBI Governor speaking to Bloomberg News Deputy Editor-in-Chief Retta Gregory. This is Bloomberg.
Boeing and the union representing 33,000 striking workers have reached a tentative agreement on a new contract. The union will vote to ratify the agreement on Wednesday, just as the struggling playmaker reports earnings. Our global business editor, Peter Verco, has been following these developments. So is it a done deal in any sense, or is there sort of a lot of uncertainty still to iron out?
It's not quite a done deal yet. The union workers have to vote on this on October 23 in a couple of days' time. Interestingly, the union leadership hasn't ratified this deal. The first deal that was struck that led to the strike, which was an offer of a 25% pay increase over 4 years, the union leadership had ratified, but the rank and file workers voted that down. That said, this offer from Boeing seems to be getting closer to where the workers were wanting. They were initially after a 40% pay increase, so 35% over 4 years still seems pretty good. There's a $7,000 signing bonus if they agree to it, and guaranteed bonuses of 4% a year, which does again get them closer up to that 40%. One of the sticking points though may be that it still doesn't reinstate a defined benefit pension plan that they lost in 2014, and there's been a lot of anger and a lot of disgruntlement over the past decade about that really led to this strike. So, yeah, it's still up in the air a little bit, but it does seem to be that the two sides are much closer together than they were, even just last week.
All of this coming at a time when Boeing also is facing a series of crises over safety, its manufacturing. So really, what's at stake for the company to get these striking workers back to work?
Yeah, well, it's critical that they get these workers back to work, Shery. The strike is heading into its 6th week. It's shut down production of Boeing's cash cow 737 MAX, its most important plane. For the new CEO, Kelly Ortberg, who started in August, and he's really been tasked with turning Boeing around, which is a massive undertaking given the problems that it's facing, from the workers' strike to the production shutdowns to the safety issues that that we saw this year that all started with that blowout on the Alaska Airlines. He's got earnings coming up. He's trying to fend off a loss of Boeing's investment grade rating. We saw last week that they put in place a new $10 billion credit facility. They've filed a shelf registration for a $25 billion capital raising over the next few years. So getting the workers back onto the factory floor, getting production starting again, allows him to move what's probably the biggest headache he's facing at the moment aside, and then start on this mountain of other tasks that he's got in front of him.
Bloomberg's Peter Verko there as we look ahead to Boeing's earnings and, of course, that vote on the ongoing strikes on Wednesday. Now, the latest from the corporate front, Shenzhen-based drone maker DJI has sued the U.S. Department of Defense for adding it to a list of Chinese military companies. DJI says after months of unsuccessfully attempting to engage with the Defense Department, it had no alternative but to turn to the federal court. The world's largest maker of consumer drones was first added to the list in 2022. Apple's newest iPhones are seeing a strong debut in China. According to Counterpoint research data, sales of the iPhone 16 are up 20% in the first 3 weeks compared with the prior model. Consumers are also continuing to shift to the pricier versions. Sales of the top-end Pro and Pro Max models gaining 44% compared to last year's equivalents. Health insurer Cigna is said to have revived efforts to combine with their smaller rival Humana after merger talks late last year fell apart. Sources say the industry giants held informal discussions recently about a potential deal. The two companies have a combined market value of more than $125 billion. Humana shares jumped in late trade while Cigna slipped.
Shery, one stock that we're watching, and in fact we've been following this story for quite some time as it's really sort of developed over the past few weeks, but WiseTech, this is the really tech darling that has been a real investor favourite. We're seeing a big decline, in fact falling at one point by as much as 14%, and in fact this is the biggest decline that we've seen in about 14 months for this stock. This, as WiseTech's board is now assessing matters that have been raised in a media report earlier in the week that the billionaire co-founder and the CEO, Richard White, paid millions of dollars to a former partner to settle allegations of inappropriate behaviour. So as the board is reviewing these allegations, which have been reported in some detail in local media for some time, they're saying that they're reviewing a full range of matters raised in the media reports, actively seeking further information and taking external advice. We have seen reporting out of a number of local media newspapers and news outlets that a woman made these claims about White in late 2020. The report said that he'd provided a board subcommittee with a stat deck denying those claims. The newspapers themselves are saying they're not suggesting the allegations are true, only that the allegations were made. And he is the largest shareholder in WiseTech. They provide logistics software, market value of about $28 billion US. That big plunge of as much as 14% in that early trade. Quite a contrast given that we've seen this stock actually trading at record highs just over the past couple of months. So we're watching WiseTech, also watching one of the financials, in fact the biggest financial, Commonwealth Bank there. Not a great weekend for CBA. Some of their customers, according to the bank, had duplicate transactions debited from their accounts. They've said that the process to reverse those charges is underway and that customers that find themselves in financial difficulty as a result can request further support. So the customers were left in, quite a quandary there as we saw that technical difficulty. They're saying that some of the other services on the app are still working as they seek to rectify this situation. Also watching South 32 as well. In fact, really watching a number of the miners on account of the China story as well as further developments in the Middle East as well. For South 32, seeing a little bit of a negative reaction there. First quarter alumina production coming in a little bit softer than expectations and then for the previous quarter as well. More ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up across Japan. We are waiting for the market opens as we had the Japanese yen surpassing that 150 level at one point last week. We did get a little bit more strengthening right now, holding at that 149.53 level. And this, of course, as we got the top currency chief here in Japan warning of one-sided moves, and traders have been really watching out for potential government intervention. And this, of course, as we continue to await the Japanese market opens as well. The key data point to watch this week out of Japan, the Tokyo CPI numbers. Of course, they will give us an indication of nationwide prices. Our next guest says yen weakness has been driving cost-push inflation here in Japan. Ernest Higa is chairman, president, and CEO of Higa Industries, which brought fast food chains Domino's and Wendy's to Japan and also imports frozen food. He joins me now here in the Tokyo studio. Ernest, great to have you with us. So,
glad to be here.
Talk us through a little bit about the impact that the yen's volatility, because we're talking about 150 right now, we're at 139 just a little bit ago. So how is this really impacting the food scene?
Well, first of all, the volatility, as you mentioned, is very critical. You know, at one time we were setting prices based upon 115 yen, and then it swung to 162. So these very volatile swings, and now we're like in 150 yen. Directly impacts the import of foods as well as the whole retail sector, because when it comes to food, 60% of Japan's food is actually imported. Whether you're importing foods or food manufacturer, the raw material is all dependent upon exchange rates. And certainly we'd like to have a strong yen for the import of food, but certainly stability so that we're able to set our prices accordingly. Because what has happened is as we've had the swings, we've had to increase prices continuously. And the increase in prices never caught up to these swings, and so we need stability.
So you weren't able to actually push through and sort of, increase the pricing, because what we've heard on the ground here in Japan is that it's been actually hard to really pass on those costs to consumers.
It is very difficult, and so the food industry has actually always been able to increase prices, but has never caught up to the actual cost push inflation. So yes, because the reason there's a resistance to price increases, we're still in a deflationary environment here in Japan.
And by the deflationary environment, you mean the mindset? Because when it comes to actual core prices and headline prices in Japan, we are near the 2% inflation target that the BOJ wants.
So inflation is kind of a very misunderstood concept here in Japan, because it's a little bit like cholesterol. You have good cholesterol and bad cholesterol. You have good inflation and bad inflation. Well, we have
I love that analogy. Weak yen, higher prices is actually like bad cholesterol.
Yes, we have bad cholesterol because it's cost push. So that means that costs have gone up and wages have not. And what you really want is good inflation where actually wages have gone up. And so you actually have real demand pushing consumer pricing. So we've had the cost push. But, the idea of the Bank of Japan is go to demand pull inflation. Yeah.
This makes me think that I need to do some research on good cholesterol. But how far away do you think Japan is when it comes to hitting finally this virtuous cycle?
Well, I believe that in terms of going from this vicious cycle we've been to a virtuous cycle, I'm actually quite optimistic. And, you know, we have been in deflation, as you know, for over 30 years, and certainly Corona has impacted that as well, and it has been very difficult. But now, as we've come out of the Corona situation, the mindset of the consumer is, let's spend rather than save, whereas for the last 30 years, let's save rather than spend. And I think that that is, you know, the mindset there has become very positive, despite the fact that we've had some cost-push inflation. But a factor that has not been a big issue until now is this huge inbound traffic that we've had, which is very positive for consumer spending. And certainly consumer spending is 60% of Japan's GDP. So this is a big factor for the economy to get out of deflation.
I wanted to ask about the impact of a couple of, I guess, demographic trends, one more short-term and one obviously longer-term. And that's obviously being the big influx of foreign tourists in Japan as a result of the weekend, but also the longer-term sort of issue of the ageing demographic. Has that meaningfully changed the outlook and the trends that you see in your businesses?
Well, everyone's, of course, concerned about the demographics and the aging population. And so there are several levers that are being worked on. First of all, the concept of empowering women to enhance the economy, because right now, for growth, we have to empower women, and they're aiming at 50% of Japan's population, and there's certainly we have this is an underutilized asset that is finally being realized that this is something we have to do. But beyond that, there are more and more changes to visa statuses for immigration, which is increasing. But I think now there are several different factors that will change that. Certainly robotics, automation, and AI. And these things, as you know, in other countries could have a social backlash because they might take jobs, whereas in Japan, because we don't have enough people, they will embrace these advances in technology. And so I think that there will be growth in the GDP.
Across the world in your businesses, I believe you also have operated Tyson Foods in the U.S., Australia as well.
We work with them, yes.
You work with them. What are you seeing in terms of the labor impact in those economies and globally also the demand picture?
Well, you know, so I think, first of all, the labor issue in Japan, as well as the world, is becoming a big issue. So that's why people are looking at how automation, robotics, and AI. On the other hand, each country, you know, has their own issues in terms of how they look at labor. So you've had the recent potential strike of the East Coast ports because they said they don't want robotics and automation to replace jobs. Having said that, as I mentioned earlier, in Japan, there's less of a social impact, and so embracing that will certainly enhance the economy. So it's not only dependent upon the population. On the other hand, the reason why we've had a decrease in the population in Japan certainly is because when you've had 30 years of deflation, you know, kids cost you a lot of money. And so as we get out of this deflation environment and go to more of a vibrant economy, which I expect we will, then I also believe this is more long-term, that actually there will be more children in Japan as well, too.
Ernest, good to have you with us, Chairman, President, and CEO of Higa Industries. And catch Japan Ahead, of course, every Monday at 8:40 a.m. If you're watching in Tokyo, that's 7:40 p.m. Sunday in New York, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Big week ahead for earnings. Plenty of highlights when it comes to the tech space. Let's get more with Annabelle Jewellers. So what's standing out?
Well, there's a number of different names, but I think one of the key ones is going to be in the semiconductor space, because you think about the numbers we had last week and it was that focus on ASML and that sort of slump we saw off the back because their sales didn't meet the expectations. Its peer, Tokyo Electron, is one of the ones that we're watching in the days ahead. Tokyo Electron is a maker of chip equipment or tools that are used in the chip equipment manufacturing process. And it's got a very heavy sales pipeline to China. So that's going to be one of the key ones. Our Bloomberg intelligence team is saying actually they're going to meet their targets pretty easily for the fiscal first half. And so that will be, of course, one of the key ones to watch. Of course, we had another report over the weekend as well talking about the pressure that US lawmakers are putting on Japanese companies and Dutch ones as well, but that pressure to stop or curb their exports to China. And we're hearing that actually shares of Tokyo Electron were cited in that latest letter that lawmakers wrote in particular to the Japanese ambassador in the US, but saying that perhaps export restrictions aren't really having their intended effect, given you have actually seen shares of Tokyo Electron rising over the course of this year.
Some other names in semis reporting too.
Yes, SK Hynix is another one that's listed in Seoul, of course, and it's a company that's doing extremely well in the HBM space. High bandwidth memory is a critical part of overall AI infrastructure. So the third quarter numbers are due, and the expectation from our Bloomberg intelligence team is we're going to see really robust demand for those products. Operating profit could have jumped. You could see better margins coming through, and again, that's that story. They're making more money out of their higher value products like HBM, and that could help offset weakness we have in other areas. DRAM, for instance, is sort of that telling that story, that ongoing weakness we see in chips that are used in things like PCs and other consumer electronics.
We have Tesla as well.
Tesla is going to be a key one to watch, of course, because we're coming hot off the heels of the robo-taxi event, which kind of underwhelmed investors. And so the details we could get out of this earnings call will be pretty closely listened out for. Anything we get in terms of the technical specifications of the robo-taxi, whether it's or when it's going to be available, the regulatory climate for it as well, their conversations with US regulators. So essentially the earnings call could end up building a little bit on that unveiling of the self-driving car event. Our Bloomberg intelligence team, that's exactly what they're looking for details of. They're also saying that perhaps margins could have improved given you've got those price pressures that are easing in the industry, and as well the sales pipeline has improved somewhat.
Annabelle Jewelers there with what to watch in a very busy earnings week. Now, Taiwan's premier says the island's government is open to the latest nuclear technology to meet surging power demand from chip makers. Jung-tai also told us how Taiwan aims to diversify its economy beyond just its lucrative high-tech sector.
Taiwan's economic resiliency comes from the partnership we have with friendly countries. Domestically, we have a strong, vertically integrated supply chain. This is why we believe Taiwan can play a crucial role in the democratic supply chain. We are heavily reliant on high-tech industries, especially in the rapidly developing semiconductor sector. However, for Taiwan's economy to achieve comprehensive growth, we cannot rely solely on high-tech industries. That's why we proposed a dual-axis transformation for small and medium-sized enterprises. We aim to help our traditional industries and small to medium-sized enterprises enter the AI era. We will use government resources to assist them in adopting AI applications and integrating with this industry, allowing Taiwan's economy to grow comprehensively.
So, Mr. Premier, the U.S. is going to have an election, a presidential election. It's just weeks away. Former President Trump previously said that Taiwan took chip business from the U.S. and asked Taiwan to pay protection fees. And do you think Taiwan should continue to allow semiconductor manufacturers to, like TSMC, to build factories overseas?
Taiwan also needs to rely on advanced countries for new technologies in materials and equipment. I often say that the government has a responsibility to Taiwan's industries, and Taiwan has a responsibility to the world.
Mr. Trump also said Taiwan should increase military spending to 10% of gross domestic product, and I wonder if that's possible in your view.
Taiwan has a very large neighbour with significant ambitions toward it, so Taiwan must take responsibility for safeguarding our sovereignty and national security. In next year's central government budget, We have allocated more than 640 billion Taiwan dollars for defence. This will bring our defence spending to approximately 2.4 to 2.6% of GDP. While we cannot allocate 10% of GDP to defence in one go, we have increased the budget compared to the past. We also hope that through Taiwan's efforts, the world will recognise Taiwan's determination and provide greater support. What we're maintaining is not only Taiwan's security, but also the peace and stability of the entire Indo-Pacific region.
You mentioned artificial intelligence earlier in this discussion, and given the importance of AI and how fast it is expanding, there is a debate about electricity supply. And I'm just wondering, do you think sort of new nuclear power technology is something, an option, say, for Taiwan that you could consider?
We know that many other countries are actively developing various forms of nuclear energy. Currently, we expect that Taiwan will have no issues with power supply for industries before 2030. Our nuclear power plants are being decommissioned and operations are stopping. This is because we need to prepare for future nuclear technology developments and to respond to any potential legal changes in Taiwan. When we take the next step forward and reconsider the existing nuclear power plants, we will need sufficient manpower. So even though our plants are being decommissioned, the personnel must not be dispersed. They must remain to address new technologies or solve current issues.
Taiwanese Premier Jung-tai speaking with Bloomberg's editor-in-chief emeritus Matt Winkler. And a programming note, we have a new program launching today, Insight with Hasina Amin at 11 a.m. Hong Kong and Singapore time. Big guests joining the show today include Muddy Waters Capital founder and CIO Carson Block and the International Energy Agency Executive Director Fatih Birol. We have the market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. Haidi is going to be a busy week of earnings and listings across the world. More than 20% of the S&P 500 companies reporting earnings this week. And of course, the busiest IPO week across Asia since 2022.
And this, as we continue to watch, these underlying risks, right? Be it we're just 2 weeks out from the U.S. presidential election, we're watching for further developments across the Middle East, as well as just these broader concerns as the IMF meetings kick off about global debt.
Yeah, Japan's general election also happening next week, and right now local polls pointing to the fact that potentially the Liberal Democratic Party, the ruling party, could actually lose its majority in the lower house elections. This as we continue to watch the Japanese yen very close to that 150 level that it crossed last week against the US dollar. We're seeing a little bit more strength in today's session, but really not by much. And we had seen a little bit of gains after we heard more comments coming from Japanese authorities, with the chief currency official talking about one-sided moves in the markets that he's watching very closely. So traders speculating that potentially authorities could intervene. The Nikkei right now opening to the downside of 0.1%. But of course, what we'll be watching in the Japanese market, Tokyo Metro's $2 billion listing on Wednesday. Take a look at how South Korea is coming online, because we have seen weakness in the Korean won as well, a 2-month low against the US dollar. This as we're getting now the trade numbers, early trade, the first 20 days of October. We're seeing a deficit of more than $1 billion. Exports falling 2.9% year on year. Imports also falling 10.1% year on year for the first 20 days of October. But the caveat, of course, we had more holidays in the beginning of the month. We're talking about 3 national holidays, including National Foundation Day. So take it with a grain of salt. We have seen chip makers doing very well across South Korea so far. The Kospi coming online with 0.3% gain, while the Korean won is holding steady. Haidi.
Take a look at what we're watching when it comes to trading in Australia with just an hour of trading under our belt now. This is a picture for the broader ASX. We are seeing some significant underperformers in terms of the stocks that we're watching, but broadly we are seeing gains of about 0.7%. They're tracking those gains in the US. We're seeing property names, real estate names in particular, seeing some strength, but tech stocks in particular are the underperformers. WiseTech is the big drag there as the shares plunged about 14% at one point, the biggest drop in about 14 months, as we have the board announcing that it's reviewing these allegations that we've seen reported in recent days and weeks in local media against the CEO, Richard White. So we continue to watch for that. When it comes to trading across treasuries as well as Australian bonds, at the moment we are seeing the yield curve in Australia holding pretty steady, but of course still that big question, the dual question really, as we get closer to the US election, as well as sort of pondering what the Fed does next. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. It's really the latter, of course, in terms of wondering if going 50 early was now the right thing to do.
Yeah, well, the data since the Fed came out has sort of posed the question, what were you thinking? Because although there had been some signs of softness before the Fed moved, after they moved, those signs evaporated. And there's something of a feeling that the Fed sort of helped with that, because markets and consumers these days can be quite quick in responding to shifts in monetary policy, and especially shifts in stance. And the willingness to go large at the beginning, I think, really raised expectations that the Fed has got everybody's back. It will come in at the first signs of weakness and will goose the economy to ensure a soft economic landing at worst. Now we've got the prospects that we might get a no landing scenario. Certainly earnings are set to beat what had been some fairly anemic expectations in this season, but they're beating them handily. We keep on getting economic data, from jobless claims to retail sales to other indicators which mostly speak to economic resilience in general, despite one of the pockets of depression, as it were, or at least poor sentiment, is in manufacturing. The manufacturing surveys have been relentlessly poor, but manufacturing has long stopped being the beating heart of the US economy. So it's not having an impact, it's not slowing it, and therefore you have this question. Did the Fed go too far too fast? And you have traders starting to speculate that perhaps the Fed might only cut once more this year. And certainly we've gone for a profile that was pricing in 7 cuts over the next 7 meetings. We've now got 5 cuts priced over the coming over the 7 meetings to come. So that's a big shift.
And that uncertainty really leading to that pressure that we're seeing on risk assets, especially across emerging markets.
Yeah, especially across emerging markets, precisely because they're very sensitive to dollar strength, which has been one of the corollaries of US economic strength translating into higher US yields, especially on a relative basis. And you look at economy after economy around the globe, UK, Europe, New Zealand, China as well for that matter, they've all been showing weakness, which emphasizes that US strength, emphasizes the dollar impact. Also emphasizing the dollar impact is the US election, both as a geopolitical risk, which ever since COVID in particular has been very much a driver of US dollar strength. There's also, with this election, the potential for a Trump presidency, which would lead to higher tariffs. That's the sort of thing that emerging markets are particularly exposed to, and emerging market currencies have been showing a reaction to that, both directly by weakening, but also there's been a lot of hedging going on in the options space for currencies like the Mexican peso, the Chinese yuan, even the Australian dollar.
Garfield Reynolds leads our Markets Live Asia coverage, and of course, we're looking ahead to a very busy week when it comes to markets trading, as we're already seeing Fujisoft move in the Tokyo session down more than 4%. We heard last week that the company was standing by KKR's tender for its shares despite receiving a higher bid from Bain Capital. That's actually won the support of the Japanese software developers founder. So Bain last week offered more than 9,000 yen a share for the company compared with KKR's 8,800 yen proposal. But we heard that the board is now really sticking with that KKR bid. We have more ahead on the Asia trade. This is Bloomberg.
Israeli Prime Minister Benjamin Netanyahu has held a series of meetings with top security aides to discuss an attack on Iran. At the same time, Israel has launched a military operation targeting Hezbollah economic strongholds in Lebanon. Bloomberg's Michael Heath joins us now with the latest. So what are we hearing here in terms of the next steps?
Yeah, Haidi, I mean, I guess we've still been waiting, and it's been some time now, for this Israeli response to the Iranian attack. Obviously that sort of focus on that ratchets up too with the Hezbollah drone that was detonated next to Prime Minister Netanyahu's country residence on Saturday, which again shows the sophistication of Hezbollah. But it really sort of speaks to Israel, its enemies not being cowed at this stage, and Israel will, needing to respond. And we saw this also with in terms of southern Lebanon and Lebanon, with Israel targeting Hezbollah's the financing arm, where Iran is able to get its cash through Syria to Hezbollah. That's outside of the Lebanese banking system and the global banking system, basically, so it's not affected by US sanctions. So Israel's sort of trying to cut down the supply of cash there. So really, although we've seen a lot of successes by Israel with the killing of Sinwar, the head of Hamas, nonetheless the fighting doesn't seem to have slowed in any way.
Does that make, I mean, it's interesting that Gaza has sort of faded into the backdrop, right? Does that make, any hopes of a continued ceasefire negotiation pretty unrealistic at this point?
Yeah, look, it's hard to see, Heidi, because Israel's also just recently started attacking northern Gaza as well, saying that Hamas is starting to reform, which is surprising in the sense that, their leader's obviously just been targeted and killed. The other issue, though, is then what happens in terms of Hamas's leadership. Will it be someone in Qatar? Will they choose somebody who's in Gaza? Are they able to negotiate on behalf of the group? What we're seeing now sort of is a fragmentation of Hamas in Gaza, where it's difficult to actually work out who can control all of those people. And this is the problem in terms of trying to get the hostages out of there or doing some sort of deal. Is there someone who speaks for all the militants in the way that Sinwar did? He was obviously a very dominant and uniting force there. So that's going to be a really tricky issue in terms of trying to get a truce at the end of the day anyway.
Bloomberg's Michael Heath with the latest in the Middle East. And of course, this is still playing out when it comes to oil markets. Crude prices are steadying somewhat this morning after we saw that slump of almost 8% last week. And again, some of these continued tensions, the watch out for reprisal is keeping prices more or less sustained there, with the Israeli Prime Minister Netanyahu holding the series of meetings talking about the next attack on Iran. So that global benchmark for Brent, they're holding just above $73 a barrel. We see WTI more or less around that $69 level. And also interestingly, we are seeing gold, Shery, climbing to that record on a number of risks, including what's going on in the Middle East as well as the US election.
And we're heading back to Singapore's International Energy Week, and we want to speak again to the World Nuclear Association Director General, Sama Bilbao Leon. Sama, I hope you have us now. My question was really about the financing that you're seeing around the world when it comes to nuclear energy, given the renewed interest on nuclear power.
Yes, well, thank you. Thank you for the invitation to be here. I'm sorry for the technical difficulties. No, definitely we have seen a lot of interest in nuclear. There is a lot of clarity in the energy policy, in the industrial policies, and that is incentivizing interest in the finance community and interest in many potential financiers and investors in new nuclear projects. So that is where we are with all these projects, and starting from mining, nuclear power plant construction, and the entire value chain of nuclear.
Given really the renewed interest on powering tech, powering artificial intelligence, it's been really interesting to see the tech giants, the likes of Microsoft, Google, Amazon, all trying to invest in nuclear energy. Do you see this as a trend that will continue, and could we see this also across Asia?
Yeah, I think that is obvious that all these intensive energy users have realized very quickly that they need access to abundant, affordable, 24/7 clean energy. And this is why they are all very interested in nuclear energy. It's one of the few clean energies that is dispatchable, that is 24/7. So I do think we are going to see this in Asia as we move forward. Obviously, North America has started, but Asia will continue. In fact, just last week, we saw the NVIDIA-backed Ubitos to actually announce plans to build new nuclear data centers in Japan, nearby nuclear power plants. And of course, I think that we will see the same trends in China, in India, and all through the ASEAN region.
Is it cost effective for these developments to take place in Southeast Asia or developing economies more broadly?
Yeah, I mean, I think that nuclear energy does provide a huge, enormous opportunity for developing economies to get abundant, carbon-free, 24/7 energy. And this is for socioeconomic development, for industrial development, to develop all the infrastructure that these countries need. So we are seeing lots of interest in Southeast Asia, so whether it's Philippines, Indonesia, Thailand, or also we are seeing in other emerging economies such as in Africa, Kenya, Egypt, Morocco, etc.
There are also some instances, for example, in Taiwan, where they're planning to shut the last nuclear reactor next year. Do you think this poses a risk to energy security?
Definitely. I do think that the closure of the nuclear power fleet in Taiwan may be it may be a problem to the energy security of the country. Certainly, they are relying more and more on fossil fuel technology. And frankly, from the point of view of their semiconductor industry, it could actually mean, higher prices and lack of access to 24/7 energy. And in fact, we are seeing in many countries how they are actually rethinking their shutdown policies. So we've seen this in Belgium, we've seen this in Sweden, and perhaps other countries in Europe. And I think that perhaps there is still opportunities for Taiwan and others to reassess whether this is a good idea moving forward for their economy and their energy security.
What are you seeing in Japan? Of course, this country has been really badly hurt by the nuclear disaster in Fukushima back in 2011. There's been a lot of fears about nuclear power and really the devastation that really a mishap could lead to. Are you seeing that change in the mindset across Asia as well?
Actually, what we are seeing is very large support, bipartisan or multi-partisan support from the public and governments in most continents in the world for nuclear energy. In fact, Japan is the perfect example. I mean, you've seen how in the energy policies of Japan, nuclear energy has always been a key component, always been expected to meet at least 22% of their energy electricity demand. That is even after Fukushima. And of course, that expectation is only growing. And frankly, yes, there are some regions of Japan that they still are not as confident as others. But we are seeing enormous support for new nuclear, for restarting the nuclear fleet in Japan and perhaps looking at new nuclear.
Where is the nuclear talent, the skilled engineers, the workers across the world? And if we're seeing this revival when it comes to nuclear energy, could there be a risk of shortage?
Yeah, no, clearly this is a concern in all clean energies. I mean, so there is a shortage of technical experts in all clean energies, and nuclear is no exception. So clearly this is an area in which we are working to make sure that we revitalize and grow the capabilities of the global nuclear industry. But let's just be clear. I mean, so nuclear engineers is just a small piece of the needs of the nuclear industry. We need all kinds of engineers that all other clean energy sources. We need mechanical engineers, electrical engineers, civil engineers, chemical engineers, plus many other professions, all kinds of technicians and operators that are common to all other clean energy sources. But of course, as you said, in some countries there has been a lag in the interest in nuclear in the younger generation. But right now we are seeing an enormous interest in nuclear energy in most Western countries in Europe, where they are looking at this energy as an opportunity to actually give back and make a difference in the world. So much work is needed, but certainly we are moving forward there.
Sama Bilbao Leon, good to have you with us, Director General at the World Nuclear Association. We'll actually have more from Singapore's International Energy Week later as well, including an exclusive interview with IEA Executive Director Fatih Birol. He'll be joining our brand new program, Insight with Haslinda Amin. Catch the debut episode at 11 a.m. Hong Kong and Singapore time. Now, Taiwan's premier says the island's government is open to the latest nuclear technology to meet surging power demand from chip makers. Jung-tai also told us how Taiwan aims to diversify its economy beyond just its lucrative high-tech sector.
Taiwan's economic resiliency comes from the partnership we have with friendly countries. Domestically, we have a strong, vertically integrated supply chain. This is why we believe Taiwan can play a crucial role in the democratic supply chain. We are heavily reliant on high-tech industries, especially in the rapidly developing semiconductor sector. However, for Taiwan's economy to achieve comprehensive growth, we cannot rely solely on high-tech industries. That's why we proposed a dual-axis transformation for small and medium-sized enterprises. We aim to help our traditional industries and small to medium-sized enterprises enter the AI era. We will use government resources to assist them in adopting AI applications and integrating with this industry, allowing Taiwan's economy to grow comprehensively.
So, Mr. Premier, the U.S. is going to have an election, a presidential election. It's just weeks away. Former President Trump previously said that Taiwan took chip business from the U.S. and asked Taiwan to pay protection fees. And do you think Taiwan should continue to allow semiconductor manufacturers to, like TSMC, to build factories overseas?
Taiwan also needs to rely on advanced countries for new technologies in materials and equipment. I often say that the government has a responsibility to Taiwan's industries, and Taiwan has a responsibility to the world.
Mr. Trump also said Taiwan should increase military spending to 10% of gross domestic product, and I wonder if that's possible in your view.
Taiwan has a very large neighbour with significant ambitions toward it, so Taiwan must take responsibility for safeguarding our sovereignty and national security. In next year's central government budget, we have allocated more than 640 billion Taiwan dollars for defence. This will bring our defence spending to approximately 2.4 to 2.6% of GDP. While we cannot allocate 10% of GDP to defence in one go, we have increased the budget compared to the past. We also hope that through Taiwan's efforts, the world will recognise Taiwan's determination and provide greater support. What we're maintaining is not only Taiwan's security, but also the peace and stability of the entire Indo-Pacific region.
You mentioned artificial intelligence earlier in this discussion, and given the importance of AI and how fast it is expanding, there is a debate about electricity supply. And I'm just wondering, do you think sort of new nuclear power technology is something, an option, say, for Taiwan that you could consider?
We know that many other countries are actively developing various forms of nuclear energy. Currently, we expect that Taiwan will have no issues with power supply for industries before 2030. Our nuclear power plants are being decommissioned and operations are stopping. This is because we need to prepare for future nuclear technology developments and to respond to any potential legal changes in Taiwan. When we take the next step forward and reconsider the existing nuclear power plants, we will need sufficient manpower. So even though our plants are being decommissioned, the personnel must not be dispersed. They must remain to address new technologies or solve current issues.
Taiwanese Premier Jung-tai there speaking with Bloomberg's Editor-in-Chief Emeritus Matt Winkler. More ahead on the Asia trade. This is Bloomberg. We are taking a look at some of the early movers when it comes to the Japan and Korea sessions. We're seeing a bit of a bifurcated outlook there for chip makers, given on some of these regulatory curb issues. Tokyo Electron off by about 0.5% there. We're seeing some other gains across the board, though. Staying on that topic, some key industry names reporting earnings this week. Let's get more from our technology reporter. Annabelle Jewellers joins us. So what's interesting to you?
Well, I mean, you just mentioned Tokyo Electron. They're a little bit under pressure today, and perhaps that could follow some of the reporting we had over the weekend. It is reporting earnings, but I'll just cover off that report first, because on Saturday we were saying that essentially US lawmakers had written a letter to the Japanese embassy or the ambassador in the US saying that the restrictions that are in place so far to curb the likes of Tokyo Electron from exporting some of its most advanced chip-making equipment to China aren't really having their intended effect. And so it really just tells you that pressure from the US toward Japan to try and join those export restrictions is still continuing to heat up. But that was the story there. It's perhaps why we're seeing that stock a little bit under pressure today. We do have those earnings that are due this week. And again, you can just see there in that chart the sales that they're making to China. They are actually expected to do well in the first half of the year, and certainly to be able to meet their sales target. That's what our Bloomberg intelligence team is saying.
Watching SK Hynix as well.
Yeah, of course, another big winner really in the AI race so far, because SK Hynix has developed quite an unassailable lead over the likes of Samsung, for instance, in HBM in particular. High bandwidth memory is key to AI infrastructure, so that's something that could really come across in its results. We are expecting better numbers for that part of the business that could offset weakness in other parts, DRAM, for instance. And again, that just sort of tells that broader story around, yes, AI chips are good, and ones that are legacy used for applications like semiconductors, smartphones, PCs, not doing still quite as well.
Yeah, what are we expecting also from Tesla?
Tesla's going to be a really interesting one to watch as well. I mean, you think we just had that robotaxi event a couple of weeks ago where they unveiled their what is intended to be a self-driving, fully autonomous vehicle, which they see as really being the future of driving, but or transport. But we didn't really get a lot of details at that event, and so our Bloomberg intelligence team, again, to refer back to them, but they're basically looking on whether we'll be able to get more details around the specifications, the rollout, the sort of schedule, the conversations with regulators, and whether that can continue to justify the sort of performance we've seen for Tesla there. And you can see there, just on a forward PE basis, it's vastly more expensive than its peers in the tech space. So yes, Tesla is due Wednesday of this week, and really one of the key focus points.
Annabelle Jewellers there with a look ahead to a very busy week of earnings. And really, Heidi, it's also a busy week when it comes to IPOs across Asia. In terms of volumes, we're talking about the busiest in about 2 years or so. Here in Japan, we have our own Tokyo Metro $2.3 billion listing, the biggest since 2018. A lot of focus on this, of course, company right now that's expected to list this week. We're also, of course, watching what's happening in India with Hyundai Motor India's $3.3 billion listing. So really a lot of IPOs across the region.
it'll be keenly watched in terms of performance, right, and overall confidence as we see these debuts. Bankers, of course, preparing to bring this sweep of equity offerings to Asia in the coming weeks. You've got companies and major shareholders attempting to close those deals before the November 5th US election, and some of the volatility, uncertainty that is posed by that event risk. But you're taking a look at the numbers, right? As much as $8.3 billion could be raised, around 20 companies from the APAC region. This is the biggest weekly volume since April 2020, and it's a pretty broad-based kind of supply that we're seeing geographically, at least. You spoke about obviously Japan being one of the major focus, but there's also deals from China and from India as well. So a broad revival after the last few years, which has been quite lackluster. It also kind of will give us a little bit of insight into investor demand in the long term after the last few years that have been pretty dim as well. China Resources Beverage Holdings, a bottled water maker, the autonomous driving technology firm Horizon Robotics will debut in Hong Kong on Wednesday and Thursday. That's a $1.3 billion raise between them, and that could, in terms of the broader Greater China market, spark more of a revival. And at a time, of course, Shery, there's a lot of uncertainty when it comes to broader animal spirits relating to China.
Yeah, we'll continue to watch what the government does, what the PBOC also does. Of course, we have the loan prime rates also decision in China on Monday. But take a look at the latest from the corporate front as well. Shenzhen-based drone maker DJI has sued the U.S. Department of Defense for adding it to a list of Chinese military companies. DJI says after months of unsuccessfully attempting to engage with the Defense Department, it had no alternative but to turn to the federal court. The world's largest maker of consumer drones was first added to the list in 2022. Apple's newest iPhones are seeing a strong debut in China. According to Counterpoint research data, sales of the iPhone 16 are up 20% in the first 3 weeks compared with the prior model. Consumers are also continuing to shift to the pricier versions. Sales of the top-end Pro and Pro Max models have gained 44% compared to last year's equivalents. Health insurer Cigna is said to have revived efforts to combine with its smaller rival Humana after merger talks late last year fell apart. Sources say the industry giants held informal discussions recently about a potential deal. The two companies have a combined market value of more than $125 billion. Humana shares jumped in late trade, while Cigna slipped.
Take a look at how we're trading on this opening day. The first few markets just online for about an hour here in Australia. We're seeing some pretty solid gains in the advance here for Sydney, tracking the rally that we saw in the US. And we're seeing property shares, and in particular BHP as a heavyweight there, driving some of those gains. Tech, though, slumping as we see really that sort of concerted decline dragged by WiseTech. Those shares falling quite significantly by about 14% at one point after the board said that it is reviewing these allegations that have been made in local media against the CEO, Richard White. So continuing to watch for that stock as well. The Kospi is up by about 0.4%. We are seeing a little bit of a reversal of fortune, so against the tide for the Nikkei 225. Japan stocks there down by about 0.2%. It is pretty narrow ranges that we're seeing at the moment. Still a little risk aversion, and that's really being expressed in the levels that we're seeing in gold. Gold hitting a record high. The tensions in the Middle East, we're just 2 weeks away, I should say, when it comes to the US election as well. Still continuing to prop up that haven demand there as well. A lot of concerns when it comes to the health of the US economy, whether the Fed might have been ahead of itself with that 50 basis point move, and a lot of that question mark over the future of China and what next we could see for policymakers out of China and the fiscal side of the stimulus picture there as well. But Chinese banks expected to cut their loan prime rates on Monday after the lowering of the key rate by the PBOC in late September. We're also watching India, where the central bank governor says the country's banking sector is doing well, but that private credit needs to be stress tested. Shaktikanta Das also told Bloomberg that an interest rate cut at this stage would be risky, that he's in no hurry to join the wave of easing by global policymakers.
India's growth story is intact. Inflation has now come very much within the target range. It is expected to moderate. But there are risks. In fact, there are significant risks, and we are very careful in monitoring the overall outlook with regard to both growth and inflation. And the balance between growth and inflation is well poised. So far as the credit market is concerned, the bank's overall financial parameters, the performance indicators of the banks in financial terms are very robust, and deposit growth was a bit of a problem. That is the gap between credit growth and deposit growth. But now the gap between the two has been considerably narrowed. And so banking sector is doing well. The other source of credit which has emerged in the recent years is the non-banking finance companies. Now, non-banking finance companies roughly occupy about 30% or so, about 1/3 of their asset size is their loan books. Their portfolio is about 30% or 1/3 of the books of the banks. So that is one sector which is emerging. Within NBFCs, we have also a special category of non-bank finance companies called ICCs, that is investment credit company, infrastructure investment and credit companies. So that also is showing good progress. And then we have other, other instrumentalities, other mediums like the REITs and the InvITs, and of late the alternative investment funds. So multiple track now funds are available to the, for the credit market in India. I'm not talking so much about the retail credit. I'm talking about the credit for the overall broader economy. And also then there is, of course, the foreign, foreign investment, which is coming both through the FPI route, the foreign portfolio investment route, as well as the other routes like the external commercial borrowings, etc., which have shown good progress in the recent years.
Private credit is the buzzword at the moment. Everyone is trying to get into private credit. What's your 30,000-foot view on this new asset class that everyone is trying to get into? Good thing, bad thing?
You see, at the global level, I think private credit is increasingly becoming, it is posing certain risks, and I think every central bank or every regulator should be looking into that. Private credit, the quality of credit appraisal or the quality of collateral, there are certain underlying risks. I'm now talking about at the global level. And the resilience of private credit in a downward credit cycle, or when the economy is entering into a more challenging phase, when the economy is entering into a more stressed period, the robustness and the resilience of private credit is yet to be tested. So therefore, there is need to undertake stress testing of private credit in multiple hypothetical stress situations.
You shifted your policy stance to neutral at the last meeting. You didn't cut. Some critics have said that you're running the risk of being behind the curve, hurting the economy. Then September inflation came in higher than anticipated. Do you feel vindicated?
We expected, September inflation to be high. In fact, I had, if I remember correctly, in my statement, monetary policy statement, exactly 9 days ago, on 9th of this month, I had said that in September we expect a big jump in the consumer inflation number. And we expect also a higher number in October also. But thereafter, in going into November and December, in the third quarter of this, in November, December, we expect inflation to moderate. And with regard to being behind the curve, I would like to say that, there can be a difference of opinion between certain sections of opinion makers or certain section of the market. But so far as Reserve Bank and the broad, overwhelming sector of the overwhelming section of the financial markets are concerned, I think expectations and thoughts are quite well aligned. The opinion poll, the polling conducted by various news, the wire services and business channels, all of them most of them had said that Reserve Bank will not cut, but Reserve Bank will change the stance, and that was exactly our decision. So I think market expectations and Reserve Bank's policy, they're well conversed, and I would like to say that certainly we are not behind the curve. Indian growth story, as I said in the beginning, the growth story remains intact. India is poised to grow at 7.2% according to the projection which we made in the last Monetary Policy Committee meeting. Growth is holding on, growth is steady, growth is resilient. Inflation is moderating with certain risks about which we have to be very vigilant. So therefore, rate cut at this stage will be very premature and can be very, very risky.
RBI Governor Shaktikanta speaking to Bloomberg News Deputy Editor-in-Chief Ryder Gregory. And we do have a headline crossing the Bloomberg right now. The Wall Street Journal now reporting that activist investor Starboard Value has a sizable stake in Kenvue. Now, this is a company that makes Tylenol and Listerine. It was spun out of Johnson & Johnson last year and has a market value of over $40 billion. And Starboard Value now wants Kenvue to make changes to boost its share price. It believes that the company has some of the best consumer brands in the industry, but its stock has underperformed peers and the broader market since its debut over a year ago, according to people speaking to the Wall Street Journal. We have more ahead on the Asia trade. This is Bloomberg. We're looking ahead to the market opens in China, with banks expected to deliver a cut of at least 20 basis points in their 1-year and 5-year loan prime rates. Our Asia equities reporter Winnie Su joins us now with the latest. I mean, are we expecting any reaction from the markets? This is widely expected to happen already.
Yeah, so pretty much the 20 basis point cut is already priced in. So people are saying that, you know, if this is not able to be delivered, then we might see some disappointment in the market, and that might be followed by some sell-off, especially after such a big rally. So people will be taking profits off the table. However, if it's delivered as expected, then since, you know, it's pretty much baked in already, we might not see as much market movement today based on that. But the optimism itself is still running quite high based on what we saw on Friday.
Excuse me, especially given that we're getting more concrete measures out of China, right, in terms of supporting the economy, I guess.
Yes, finally. So actually, it's been quite a mixed bag of reactions that we've been seeing. When you kind of dial back and look at what happened last week, we got the briefing by the Housing Ministry, and before that was the Finance Ministry. So those were welcoming, but it was kind of underwhelming. But then on Friday, we've got that GDP data that was better than expected, but still fell below 5% target. So that means people are expecting now more support from the government to still come through. And with the PBOC finally announcing the specifics for the relending facility and also the swap facility, that really boosted sentiment and helped people finally understand that, okay, the PBOC is keeping its promise. And because it promised that more is likely to come, investor sentiment is rising on that. So optimism is finally starting to come back after bits of disappointment, but it still seems quite volatile depending on what timing and how much of a scale we're going to get from these stimuluses.
So is that really the major catalyst?
So that is currently a big catalyst for the market in terms of how big the stimulus is, and if we're going to get that targeted stimulus and more liquidity for the stock market in terms of support. So people will be watching the MPC meeting most likely in November, because that's actually going to be the meeting that we're going to hear more and to see if the budget actually gets through. So until then, we might still see the market kind of in range bound as people trying to figure out how likely that is going to happen. And macro data is another key catalyst that people will be watching, and that includes some of the October retail sales data and the property data.
Bloomberg's Asia equities reporter Winnie Su there with the look ahead to the Chinese market opens. We have more ahead. This is Bloomberg. Welcome back. Malaysia says it wants to become the next chip powerhouse in Asia. Economy Minister Rafizi Ramli told us exclusively about plans to move up the sector's value chain in the next 2 years.
Our biggest preoccupation now is to make sure that we localize the industry. So you have a few levers. We have a lot of demands for data centers now. Of course, data centers go through its life cycle, and then it has to replenish its servers, its chips, its racks, and we are also very good with the back end. Our preoccupation now is building our strength throughout the value chain.
Building an ecosystem.
An ecosystem. I mean, we have an ecosystem before, but it was very much limited by the back-end industry. And now with the presence of data centers, there will be a local demand for chips, especially for AI chips. And therefore, I think we want to make sure that hopefully we don't assemble chips coming from elsewhere, or the data centers here don't just import AI chips from elsewhere. We want it to be here. And we are working on it.
Higher up the value chain?
Higher up the value chain, yes.
When might this happen?
I think it's possible in the next 1 or 2 years. We begin to see, the first few batches of manufacturers or companies looking at Malaysia as a viable place to design and to manufacture everything here, because the demand from Malaysia and this region alone is also quite significant.
Malaysian Economy Minister Fizi Ramli, they're speaking exclusively to Bloomberg. We'll be hearing more from that conversation later today during the premiere of our new show, Insight with Haslinda Amin. Has joins us now to tell us what to expect.
Well, Haidi, it is a big day for the team. We've been brainstorming for months now, and really the thinking behind Insight is to provide a platform for a more in-depth conversation. We want to provide the time and space to give context and analysis, not just to headlines, but also what it means for investors when we discuss issues. So really the context is to give a deep dive into issues that matter. Remember that when it comes to the thinking at Bloomberg, context changes everything, and the program hopes to do just that. So we're targeting the big names across sectors, not just finance, but geopolitics. In fact, even technology, AI is a big issue for every company out there. So we're deep diving into all the issues that matter.
Haslinda, congratulations. I mean, Haidi and I really know the challenges, pain, and effort, and really, really the hope when it comes to launching a new show. Who's coming up?
Well, big names coming up. We have the likes of Kasim Block. You may know him as the king of short selling. We know him as the man who started short selling Chinese companies back in 2011. We'll talk to him about whether China is now investable or not, given the changes, the reforms that we've seen so far. Of course, he hasn't been optimistic on Chinese companies. He talks about governance, accounting. Are those issues still relevant today as we speak about the Chinese market? We're also speaking to the chief of the IEA amidst escalating tensions in the Middle East. How will that influence in terms of supply and demand of oil? We know that oil trading under $70 a barrel despite what's happening in the Middle East. Why is that? Has it got to do with China? We'll delve into all of that when the show kicks off later at 11.
Bloomberg Insight anchor Haslinda Amin there. Well, that is it for the Asia trade. Our markets coverage continues as we take a look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.